Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today's Wednesday. It's January 11th. It's about 8:05 in the morning. The market's going to gear up to open up in an hour and 25 minutes to be specific with you. And by the way, if you haven't posted a comment, if you have a question for me, the year is just getting started. Post your comments in the video, in the comment section of the video on YouTube Wealth Press channel, and I will respond. I want to hear from you. I want to help you succeed in 2023. I really do. So the markets are gearing it to be sort of flat, kind of flat. We had the Fed, Mr. I'm not going to predict the future until I get reappointed, Powell speaking. The NASDAQ is kind of just hovering around slightly higher. The Dow's down 44 points. If you want me to be really truthful with you, which I always am, this is randomness. This is very, very random trading action. On the other hand, if you look at the bond market went down yesterday. It didn't go up. Bonds market going down is higher interest rates. It puts more pressure on yield. So interest rates are higher, which puts more pressure on tech stocks. So I'm not really happy about that. Furthermore, in terms of, and I'll go through the fundamentals. We have petroleum status report at 10:30. So far, energy markets is higher, and energies, as I'll show you in a second, are in fact starting to lead. Look at energies. Even for a month, over a 1 month period, energies are the only thing that's doing better than energies is communication services. But energies are almost there, almost at 3%. Communication services at a 3.20, but energies are doing well. But look at communication services last quarter, 6.89% versus 22%. Look at communication the quarter before, negative 1.44 versus 24 positive. Energies are up 16.4% for the year, over the last year, calendar year, not calendar year. I mean days as of a year ago. Communication services, on the other hand, are only up 1.21%. So 16 versus 1%. I will definitely go with energy. So we'll have a report. We'll see how that goes. But so far, as you can see here, crude oil is up for the day. So I'm assuming the report will be positive for the energy market. In terms of the broad market, look at where the Dow is. We're still at the upper end of that range. We're literally right at that bar right now. So we're still congesting. We're still going sideways. The night is still young. Look at the NASDAQ. This is the hourly chart. Look at where we're at. We went right to the upper part. We backed off, and then we went back there again. But we haven't gone through it. Look at the data. This is the daily data. Look at how the daily looks. We're still in that channel. Nothing has changed. Look at the S&P. We're still in that channel. Nothing has changed. So if we're still in that channel, then we don't have any directional bias just yet. I think we will after the CPI comes out. Now, speaking of the CPI, that comes out on Thursday at 8:30 in the morning. Let me just show you what the expectations are, and then I'll do the morning update report. So right now, the year over year, nobody cares about month over month. Year over year, they're looking at 6.6%. The range is 6.3 to 6.8, and X food and energy, which is what we're really looking at. Now, this is for this is the last one. We're looking at, this is for December again. We're looking at 5.7. This is the crucial number that we're looking at. If this number is really lower than 5.7 by substantial, then the Fed will say, well, what we're doing is working, blah, 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 blah. If this number is 5.7 or higher, they're going to say, we've got a lot more work to do. So you're going to have to keep your eye on that number, but expectations are starting to get tight, which is a good thing. That's coming out on Thursday, and then we have jobless claims on Thursday. Let's talk about the global economy and see what we can expect based on what we're seeing, and I'll give you my analysis. So market participants are waiting U.S. inflation data. That's the report that I just talked about on Thursday. I'm trying to kind of connect the whole dots and give you the big picture. Federal Reserve, Jerome Powell opened his mouth yesterday for the first time this year, and he said, commenting on the monetary policy outlook, but indicated that the central bank's resolve. He refrained from commenting on monetary policy outlook. Excuse me, refrained. But look what he said. He said that unpopular decisions may be needed to curb inflation. That's the problem. And then Other Fed officials have reiterated the view that the Federal Reserve needs to continue raising rates to combat high inflation. Michelle Bowman said on yesterday, that the central bank has more work to do to bring down inflation to its 2% goal, noting that higher rates should prevail for some time to stabilize prices, which means we are still in an inflationary environment. The World Bank on Tuesday slashed its forecast for the world GDP from 3% to 1.7%. That's almost half, as the impact of central bank rate hikes intensifies. The bank also reduced its guidance for 2024 to a gain of 2.7% and said the average growth from the 2020 to 2024 period, the 4-year period, would be under 2%, the slowest 5-year pace since 1960. That's not good. Investors are looking for consumer data. This is the prices and the numbers that I was just backing you guys into on this report right here. This is just saying what they're expecting the number to be, and I gave you that information right here. That 5.7 is what everybody's focused on right now. Don't look at the main number. Look at the core number. Meanwhile, futures are now pricing in almost 80% rate hike of a 0.25 and 20% of a 5.0. Remember, earlier last week, this number was almost at 40%, and this number was almost at 60%, and now it's moving back down, or higher towards the 0.25. All eyes are on crude oil inventories. It's coming out at 10:30 today. They're looking at negative 2.243 million compared to positive 1.694. A week-to-week basis, I wouldn't look at these too closely. Euro stocks are up almost a full percent after digesting hefty flow of quarterly corporate results, with the retail sector in focus, which is going to happen in the U.S. in about a month. The retail sector is widely expected to have tough times ahead, with consumer demand set to deteriorate in 2023 as growth in many European economies slows down. Folks, European fashion, America, remember, it works both ways. So China, losses were limited as major technology stocks surged after government signaled less severe measures against the sector. Investors are awaiting Chinese consumer price index, also out on Thursday, to assess whether price pressures improved with the relaxation of anti-COVID measures. Yeah, don't hold your breath. It happened, last week? In Japan, stocks closed higher as export-oriented stocks gained on the recent weakness in the Japanese yen. We don't have any major pre-market movers today, but we do have earnings on KB Home, something you need to pay close attention to. Now, let's go back to the sectors. So let's go, here we go. So as you can see here, energy, industrial, financial, basic material, consumer, and utilities are gearing up. The healthcare, what I'm seeing right now, to me, as of right now, still appears to be a pullback. I wouldn't be holding my breath for downside. Another interesting factor is communication services, for the first time since the recession, is starting to outperform consumer discretionary, real estate, and technology. That's very important because this sector has been in the dumps. And I still think it's going to be in the dumps, but it is starting to move a little higher, and it has a lot of the FANG stocks. It has the Google, I think it has NVIDIA. It has a lot of stocks. So let's keep an eye on this sector and see how it does. But overall, it's outperforming the rest of technology, which is a positive sign. I just wish the rest of the market contributed to it. Keep your eye on the bond market. The bond market is going to really dictate what happens to the technology sector over the next few sessions. And as I keep reminding you guys, when we look at momentum levels over here, they're still very, very weak. Look at communication services, 36% versus 80%. So look at communication services on a long-term basis, and you tell me that this is going to stay here. Look at where we're at right now. Now, to me, this looks really, really overbought. This is going back to 7 years. Let me just remove this moving average. We don't really need it. So to me, this looks overbought, and it looks like it's going to cool off. Again, if I was seeing the opposite, if I was seeing 80% here and 36% here, I wouldn't be saying that, which is kind of what we're seeing in energy. Look, 43% versus 74%. That's stability. But when you have 83% or excuse me, that I'm looking at the wrong sector. Information technology, 64%. That's not really great. So be very, very, very cautious. Now, today is Wednesday, and on Wednesday I give you long trades and short trades, and I'll do that right now. For the long side of the market, I'm telling you right now, I like ExxonMobil, and I like where's the other one? Schlumberger. I like Schlumberger. It's at highs right now. I really like SLB, and I really like ExxonMobil for energy stocks. And I'm also liking, let me just show you something here. I'm also liking Halliburton. So energy, and more energy, okay? Now, to the short side of the market, let me just flip this over. Got a lot of things to the short side. So what I want to see is, and this is a lesson here, when I'm looking for stocks to the short side, I don't want stocks that are making all-time lows. I want stocks that just went up and are now starting to cool off. Remember I told you Dish was a sell the other day? It went from 16 all the way to 14. That's what I'm talking about. So what I'm looking for is stocks that are really weak that are looking to turn around. So one of those stocks is GNRC. Another stock is SIVB. I think these stocks are going to turn back down. Another stock is VFC. So you've got VFC to sell short. You've got Dish, which I think is going lower. I think it's going to hit the lows again to about low 13s, my opinion. But you've got SIVB. Expect this thing from go to 250 back to 210. CTLT. Expect it to go from 49 all the way to 41. And GNRC. Expect it to go from about 110 all the way to about 85. I think all of these stocks are going to revert lower, all of them. And Seagate, I think Seagate is going to go from right here, from 56 all the way down to 49. So I think a lot of these stocks have more downside to go. Remember something. We are still in a congestion. We are still consolidating. We are still in this range. Nothing happened. We're not out of this range just yet. And when you look at it on an hourly chart, we're still there. And I'm afraid if we break out a lot, we're just going to come right back down because the bond market is not really giving us any reason to rally. And I think the market, it would be crazy. Look at the market down 1.75 yesterday. I think it would be crazy for the market to rally with the bond market moving lower, not higher. Also, I just wanted to give you guys a little tip. Look at the financial market and look at bonds. The charts look almost identical. Look at higher high, lower high, right? Look at the bond market. They're really following each other quite a bit. Look at the relationship. Very, very similarly. All right, now, you have your strongest stocks. You've got the energy stocks to buy. You've got all the stocks to sell, including STG, or not STG, STX, GNRC, SIVB, and CTLT. And I think they're all going to test their lows. Now, before I let you guys go, folks, earnings announcements happen all the time. Not just during a few weeks in each quarter. We call earnings season. They overlap each other. There's earnings virtually every day. There's over 17,000 different reports every year. There's no way to know or could possibly keep track of all of them. But the good news is you don't have to. Legendary trader, and I really mean that, legendary trader Tom Busby, T-Buzz as I like to affectionately call him, he recently discovered that right after certain earnings announcements, there's a special trade window that opens up for 72 hours. And I've been saying the same thing for years. Look at my videos from 5-10 years ago. Never go into earnings. Trade earnings after they're done, not beforehand. That's the only way to do it. I completely second his opinion on that. So there's a special window. It opens up for 72 hours right after earnings. And this discovery has completely changed how he trades earnings. And I've been talking about this for years. Only suckers get into stocks ahead of earnings because you just don't know what's going to happen. You're gambling. And we're not doing this to gamble. If you want to gamble, go to Vegas. At least you get comped for losing, right? So I sat down with Tom for a very special presentation where we decoded all of this and we share all the details on this incredible breakthrough. And it's something I really strongly believe in. I totally think traders, this is the only way, in my opinion, to trade earnings. Follow the link below, watch this presentation, take notes, and learn the right way to trade earnings. You guys have to follow this. You got to learn about it. And if you can't find the link, go to the Wealth Press YouTube channel, and it's there. Follow it, learn it, take notes. You will love it. And remember, energy stocks are bullish again, and all those stocks that have been making 20-day highs from all-time lows, it's time to short them again. Communication is overbought, and I think the CPI is not going to go as everybody thinks it will. My 5 cents. Talk to you guys later. Comments below this video. I'll see you guys on the other side. Bye.